Good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Today, we're going to go over our live mortgage rates, and then we're going to talk about asset utilization loans. Give us just a moment here to go live on all the different platforms. We got the chat up on the screen there. Feel free to drop a comment there in the chat as you tune in. Happy Friday, everyone. Hope everyone's ready for a great holiday weekend. And it looks like we're live on all the platforms, so we'll go ahead and get started here. What we'll do is we'll take the chat off the screen, but feel free to drop comments there in the chat and drop any questions you have in the chat as well. And we will get into that. So welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our CSO, Jose Gonzalez. We are a lender that specializes in non-QM loans, and what we do every weekday at 11 a.m. Eastern on this show is go through our live mortgage rates. Then we do a deep dive into a different loan type, and today's loan type is going to be asset utilization loans. So Jose will take us through that shortly, but first, let's check out the live rates. So Nick, if you're ready, let's go ahead and pull up the rates for today and see what they are looking like.
All right. So as usual, we will pull up a standard scenario and compare the APR across the programs. It is August 30th, just after 11 a.m. Eastern, so all these standard programs have their initial rate sheets live here. If you'd like a full breakdown and itemized loan estimate that goes over all of the fees, please get with one of our loan officers. They would be happy to help you out. For our standard scenario, so we can compare across the programs, we'll do a single-family home, $500,000 purchase, $400,000 loan amount. That corresponds to 20% down payment, 80% loan to value. And we use an estimated 760 credit score and an estimated 40% debt to income ratio. So with those settings, let's check out the rates for today. So first up, as usual, our 30-year fixed conventional for a primary home, typically the first option most people think of when they think of a mortgage. Rates today coming in at 5.99. Final APR 6.277. Absolutely amazing. Finally under 6 there. And if our customer doesn't qualify for a conventional option, we'll typically want to present an FHA option, which allows more leniency on credit issues and a higher debt to income ratio, but does require upfront and yearly mortgage insurance. FHA comes in today, 5.125 rate. Final APR 6.052 with all the fees there included. So if our customer qualifies for both, they may want to consider FHA if they're willing to do the mortgage insurance, and the customers that need to use it, definitely a great option. And moving on to our VA, it's only for our eligible vets and active service members. If our customer is eligible, these programs are amazing. Rates today coming in 5.25, final APR 5.542. So notice if our customer qualifies, definitely a better option than FHA or conventional. So please take advantage if you qualify. And the final option for standard programs, USDA, is only for USDA eligible areas. Those are the rural areas of the country. If the property is eligible and the borrower is eligible, these are good options to consider. USDA comes in today at a 5.125 rate, final APR 5.867 with all the fees included. And we'll compare that. Typically, our customer will be comparing that to an FHA, which USDA is a touch cheaper. And also compared to conventional USDA is going to be a touch cheaper in this example. So good option for those properties in those areas. And that rounds out our standard options that any bank or lender has. And if our customer doesn't qualify, unfortunately, most banks or lenders have to deny them. But we have over 5,000 additional options, including first up here, our 30-year fixed non-QM alt-doc options for a primary home. So if our borrower doesn't qualify using a conventional option with 2 years of tax returns, needs to use alternative docs to qualify, we can switch them to our non-QM alt-doc option. Rates as low as 6.375 today. Final APR comes in at 6.707. So well within half a point today, which is amazing for our customers to use alt-docs such as bank statements, 1099s, and our topic for today, asset-related programs, is one of these options. And our investors can also use our non-QM alt-doc options. Lots of flexibility with investment properties here. So our non-QM alt-doc option, bank statement or similar, comes in at 6.875 today. Final APR 7.300. And we'll compare that to our other investment property options. So there are no government programs, so no VA, USDA, or FHA, but we do have our conventional option for investment properties coming in at 6.75 rate today. Final APR 7.095. So a little cheaper than our alt-doc option, but not cheaper than our favorite loans, our DSCR loans. No income needed, no employment needed. We simply use the estimated rents from the appraisal to determine a DSCR ratio. The estimated rents on the appraisal can cover the estimated expenses. That's a ratio of 1 or higher, aka the property cash flows monthly. For these demos, we use a ratio of 1.5 so we can see all the programs. With a standard 3-year prepayment penalty, rates today come in at 6.5, final APR 6.810, so being conventional a little bit there. And with a 5-year prepayment penalty, we can sweeten the deal a little bit, rates as low as 6.375, final APR 6.707 there, so able to beat conventional as well. And we do have our no prepayment penalty option coming in at 6.999 rate, final APR 7.429. So a little bit higher than conventional there to do no prepayment penalty. So usually recommend our investors to add that in order to get a little lower rate there. And the final 2 options we'll go over quickly are 30-year fixed second mortgages. So a lot of customers have a low rate first mortgage, and their only option to get cash out without touching that first mortgage is a HELOC. We now have these new fixed rate second mortgage products for a primary home to get cash out of that property without touching that first mortgage. Rates as low as 8.375, final APR 8.8, which is much lower than a HELOC option and allows our borrowers to access that equity. And same thing for our investors. So 30-year fixed second mortgage option for investment properties. HELOCs are even rarer for investments. Coming in today, 9.75 rate, final APR 9.995. So first time in the show that the second mortgage for investments has been under a 10 APR, which is amazing. So great options. And these are non-QM as well, so can use bank statements and similar. And now we will switch to our deep dive topic for today, asset utilization loans. So these are a subset of non-QM. So you see our category of non-QM that we go over. Typically, bank statement is the most common and largest category. So that's typically the option you see when we do our live pricing. However, Jose will be able to show our asset utilization options here and the live rates for today on those programs. So Jose, if you're ready, let's talk about asset utilization programs.
Good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator app. Asset utilization, very interesting income segment because it actually allows you to use assets, liquid assets, to qualify as income, most importantly, without having to pledge those assets or encumber them in any way. That is the most interesting component because there are asset type programs like at some of the big brokerages where you can pledge some of your assets like stocks, bonds, and the like to obtain loans. But in this scenario, you're not pledging any assets. You are just providing statements to document the balance of those assets, and then using a percentage of those assets as income. Now, there are a number of different formulas because this is a non-QM program, and like all non-QM programs, all guidelines are specific to the investor that is buying the loans, and they're all different. Some use 84 months, some use 240 months, some give you 70% of an asset, some give you 100%, some say you have to have it 4 months seasoned, others 3 months. So they're all over the place. So what you just got to note is whichever is the option that's being selected, review those guidelines clearly to determine the income for your borrower. But the most important part of this is that the assets do not have to be pledged, and it's just going to use a percentage of them. They do have to be liquid assets, though. So we're talking checking, savings, money market, stocks, bonds, mutual funds, even 401k and IRAs. But we're not talking about, for example, paid off cars, other properties, valuable artwork, nothing like that are the type of assets that we're talking about. We're talking about purely liquid financial assets. So let's get into the options we have today, so we can break it down for you and excite you with these rates. Now, 90% is our maximum LTV for this option as a primary purchase. And as always, never any mortgage insurance applicable on any non-QM loans, even over 80% LTV. The higher interest rate at the higher LTVs is basically what takes the additional risk into consideration. So we're looking at 8.3% 5% as our lowest cost option here at a cost of 7.75 points. And you can buy that down all the way to 7.625% rate at a cost of 2.5 points for our 90% LTV asset utilization primary purchase. Our investment purchase, only 5% lower LTV for an investment property. And you'll notice the rate's actually a little bit better than the primary. Reason being, A, we're at 85% LTV instead of 90, but also on the investment properties, we are able to add a prepayment penalty, and most investors will prefer the prepayment penalty to get the lower rates. So we're looking at 8.125 here at the same 3/4 of a point cost, and you can buy that down all the way to 7% at a cost of 3.25 points for 85% LTV investment property purchase using asset utilization. And now for our lower credit score borrowers, 600, that's a very low score, is our lowest score option. And great news that we can still attain 80% LTV. In this case, I'm sharing the investment purchase option with you, even though obviously this is also available as a primary purchase at the same 80% LTV. So with a 600 credit score, our lowest cost option at par is 10.999, and our lowest rate option 9.375 at a cost of 3.375 points. Now, our asset utilization cash out options, I do have 3 options for you here today, the same options I shared for you for purchase as refi. So here we have our primary cash out. 80% is the maximum LTV for any cash out. And we have 8% as our lowest cost option at par. And you can buy that down all the way to 6.875 at a cost of 2.375 points. Our asset utilization investment cash out option, still 80%. And we're looking at 7.874 as our lowest cost option at par. And you can buy that down all the way to 6.874 at a cost of 3 points. And our last option here is, again, for our 600 credit score borrower. That is our lowest credit score for this option. 75% LTV at the 600 credit score, which is still amazing. Same is available for primary. I'm just sharing the investment option with you here. So for 75% LTV investment cash out, you're looking at 11.25 as our lowest cost option at par. And you can buy that down all the way to 9.625 at a cost of 3.375. So great asset utilization options here. This is a segment that is probably underutilized. Many people may not be aware that you can use liquid assets to qualify, but I can definitely tell you I've had a few this month alone come through the disclosure desk. Great rates in the low 7s, so take advantage of the asset utilization options.
All right. Amazing. Absolutely amazing. Okay, I don't see any questions, so we'll wrap it up. Remember that we do this show at 11 a.m. Eastern every weekday where we go through our live rates and then do a deep dive into a different loan type. So we'll be back next week with a new loan type. Next Monday here is a holiday, so we will see you all on Tuesday at 11 a.m. Eastern for the next episode of Daily